Not sure when it ends. All right, perfect. That's cool. That's cool. So we're gonna do a little foundational stuff just to make sure that we are all on the same page. So if you're looking to buy, we're always going to buy at C. All right, C is where we're buying from. And this is going to follow up to who asked me about imbalance? Pedro's question, right? When we get down to this area where we're in a discounted area, C is where we want to buy from. Why? Because it's a lower high. I'm gonna circle back to that for a second. But then there's something over here, right? Something that happens during A to B in that A to B phase that's going to point out to us that this is the area that we should be looking at. One of those things is going to be imbalance. I'm gonna come back to that. All right. So we're looking to buy once we're in that discounted area. We're looking for wherever this higher low is. All right. Now, I mentioned higher lows, so I got to mention this real quick just to make sure that my beginners are not completely lost. All right. Beginners, this is what we're talking about. Remember, I told you we only do two things, we buy or we sell. Since we're buying or selling, we only buy when price is going up. And when price is going up, it looks like this, right? It doesn't just shoot up in the air. All right. There are these ups and downs. This is a healthy market. This market is unstable. Okay. Now, when it's going up and down like this, we know that it's in the uptrend because it has a series of higher highs and higher lows. So it's going to start with a low. Jeez. Low, high, higher low. All right. This is a higher low because this low is higher than this low, right? So that's why this is a higher low, which means that this is also a higher low, which means this is also a higher low. Okay. And when we are buying, we always buy from a higher low. All right. Just on a point of structure, we always buy from the higher low. But I'm going to get to how we are able to identify when the higher low has formed. And it's really going to be pretty simple. All right, this is now a higher high. And this is a higher high. And this is a higher low. All right. So my advanced students on the line, just remember this. The advanced students, the seasoned who need a little more seasoning, we are always going to come back to this pattern right here. My beginners are probably on the line like, eh. So the advanced people need a little refresher on this, and we've been doing this for the last 3 weeks. Yeah, get excited. Get excited right now. All right, so we always want to buy when there's a higher low. All right, cool. And this higher low needs to happen at a discount that makes sense, right? You guys have shopped Black Friday. You always shop when the discount is really, really good. That's what makes sense, right? There's room for profit. If you choose to sell something, there's room for profit. All right. So 50% or more is the discount that we want to get. Alrighty. So we know there's a pullback and we know we're looking for the trend to end. Okay. I have a question to you that is not a trick question, right? This is not a trick question. Price goes up, right? We know this pattern exists, right? We know that this pattern exists. And since we know this pattern exists, I want you to just think about this with this pattern in mind. We get on our chart and we see that price is going up. Then it hits the ceiling and it starts to come back down. In order for this price, which is going down right now, this is selling. In order for this to start buying, it has to stop selling. That makes sense, right? In order for this to start buying, it has to start selling. In order for this to start buying, it has to stop selling. Does that make sense for now? Let me know. Cool. All right, because it has to go back. In order to go up, it has to stop coming down. Our problem is most of the time we don't know We don't know when it's going to stop selling. Okay? All right. Cool. If you have written nothing in your notebooks yet, you need to draw this pattern. Because what if I told you that in this particular pattern that I told you shows up everywhere? What if I told you this, which is A to B? What if I told you A to B and this were the same thing? All right, just let me know if we're on the same page. From A to B actually looks like this right here. Put AC in the chat if you are clear on that. A to B actually looks like this. All right, cool. So this pattern is just a simplified version of what the trend is doing. It goes up and it comes back down. But A to B is an uptrend, B to C is a downtrend, C to D is another uptrend. Okay. So if we know that there are trends, if price was going up, we know that it's no longer going up when this starts to happen, right? Because we know that uptrend, let me write this down. An uptrend is a series of higher highs and higher lows. Therefore, if we stop getting higher highs or higher lows, is that still an uptrend? Let me know. Yes or no? Uptrend is a series of higher highs and higher lows. If we stop getting higher highs or higher lows, are we still in the uptrend? Yes or no? No. All right. Cool. Cool. Does anybody know what a downtrend is made up of? Because if it's not an uptrend, it's going to be a downtrend. Right. So a downtrend is going to be a series of lower highs and lower lows. All right. So if this was going up, we would know that it's no longer going up when the uptrend starts to break down. All right. Here's what this looks like. All right, Michelle, this is for you. Here's what this looks like. If this is the higher high, price then comes down and does this, right? If price comes down and does this right here is not higher than this, which means that this is a lower high. Sorry, this is a lower low. Okay? This is a lower low. So right now, at this point, at this moment in time, we have a lower low and we have a higher high. All right? It's not a trend yet. Because if we were to draw it, we would have this. Right? Remember I told you the pattern is going to show up. The pattern has 3 phases. This isn't the pattern that tells us that for if we're selling because it's not complete yet. So since this is a lower low, we have to wait and see what happens here. If for whatever reason price comes from the lower low and comes up here, we have gotten another higher high. Okay, we've gotten a higher high. The problem with this now is we're in a similar position to this pattern that we just drew. It's incomplete. Because if it starts at a low and creates a high, we are just here, right? We don't have a pattern telling us that we are buying as yet, and we don't have a pattern telling us that we're selling as yet. All right. So that means that we don't have enough information. We gotta wait. We gotta sit on our hands. If when price is coming back up here, it stops anywhere below the last higher high, this is now a lower high. Okay? This is now a lower high, which is great for us. Let me draw it like this. Boom. If this happened and it started to come down, we now have a higher high, a lower low, a lower high, and price is starting to come down. At this point, we have the pattern is started to complete. It's not complete as yet. All right. So we can A, be cautious, or B, for my advanced students, this is your first to the party entry. This is your first indication of, hey, we are probably going down. Yeah, I'm recording. All right. This is your first indication that, hey, we're going down. All right. So you can, depending on your risk management, decide to take the trade. For my beginners, what I've been teaching is let's wait for the pattern to complete. Why? We are all about pattern recognition. We need this. So we got our lower high. We wait. Boom. We get a second lower low, right? When we get a series of lower highs and lower lows, we are in a downtrend. All right. So if this happens, price comes down and we get a lower low. If price turns back, when we get a second lower high, right? The second lower high after being in an uptrend, that is when we want to place our sell. All right. And that's just on principle. All right. So, Michelle, if you were seeing an uptrend happen, right? You were looking for sells. Let's see. So if this is our market here, boom, price came down. Jeez. All right. Price came down. All right, hold on. Seriously? Price came back up, right? This is the uptrend here. All right. So if this is you were following this, you know, this is your last high. Price came up here, kind of gave you equal highs. If from here, price came down and did this, boom, took out this low, came back up, gave you a lower high. This will be first to the party if you decided to take this entry here. But if you wanted to get full confirmations, you'll let price take out this low and you will look to enter on this second lower high. Michelle, let me know if you're following. All right, cool. Perfect. Right? The reason why on a point of caution, you would choose this one. The only reason why this one is a safer option than first to the party is because you get that full pattern creating itself. You get this complete pattern happening. All right, so you got two lower lows, a lower high, and you took the entry at the second lower high. All right, so push down, lower high, lower low, second lower high, boom, took the trade. Right, now let's look for this in the wild to see if this makes sense. All right, let's use this right here. Let's use this. All right, so here we go. All right, press down, push back up, push down, push up, push down, up, down, up, down, up, down, up. Uh, let's do this. All right. So here's what we have, right? Here's what we have. Is this dog really, really loud for you guys? Once I'm higher, louder than the dog, then I'm good. All right, so this is our last high, and this is a more current high. All right, so if you're looking at this market here, boom, we're gonna zoom in a bit and see if this high, all right, great. We're gonna see if this high ended up being high or equal to this one, right? Lucky for us, it's equal, right? Because remember, the pattern still shows up all the time. If we get a higher high, then it's more likely that we're going up. So these are equal. So we may not be going up right now. Right? We are only 1 hour, but let's just follow what structure is showing us. So, all right, let's draw a line here. All right, so we're watching this come down. This was the last low. Price traded down, boom, broke this low, which means if this was a low and this is a new low, this low is lower than that one. So this is a lower low. Price pushed up. This high is lower than this high. So this is a lower high, which means that we are in a downtrend right now. All right. So then we get down here. Down. So we know that right here, this was a downtrend. This is a low. All right, let me put these things on here. Lower low, lower low, lower low, lower high, lower high. All right, so we got a lower high, lower low, lower high, lower low. This was a downtrend. If this trend is turning into something else, how will we know? We would start to get what is expected for an uptrend, which is higher highs, right? Did we get a higher high? This is a lower high. This is the next high. My beginners on the line is this high higher or lower than this one? Higher. Boom. So that means that this is a higher high. All right. So this is the higher high, but we don't have a complete pattern as yet, right? So this is still mostly in a downtrend, right? This is price coming down like this. It's still mostly in the downtrend. We just got this. Yeah. So this is just A, B. We got to wait for C, D to happen. Or if you're more advanced, this would have, geez, this would have been your first to the party entry around here. So at this point, I'm just going to pause. And for, I think it was Pedro, we're going to talk about imbalance a little bit. All right. We're going to talk about imbalance a little bit. When we are here in this market trading, all right, the hedge funds, the banks, the major institutions, they are pushing the market. They're the ones that are causing price to go up and down, all sorts of things. Actually, let me play this commercial real quick because it is 7:30. So we can take a 1 minute break. Am I still sharing audio? I believe so. All right, real quick. takes to make a decision. After that, sharp with a conversation. But the recommendation is to get your resignation and pay. Saturday, gonna be here in a minute. Walking in the Marriott like a in for a minute. Oh yeah, food camps going down like a spirit. You hear this? I hope you're not the type to be embarrassed. But if you miss this, then you miss the sauce. Mr. Lashley, Chef Royal D, the boss to my freshman. Yeah, you know I got you covered. Down to discipline in about 6 sessions, you want out decisions and mindset, unlimited progress. You think this apply, you will see nothing yet. That is enough for the boss. On God, can't even spend the 6 y'all. Yo, what is going on? Prophet Arena, listen, September 6th is going down in the courtyard by Marriott, 10 a.m. to 4 p.m. Hastings Christchurch at the Marriott. It's 4X. Count live and direct. Market Master is coming right to you. It's going to be phenomenal. Don't forget to register. And absolutely don't forget to pay, man. Get in the arena. See you on the 6th. Oh, the audio is too low? Okay. Pretty much we're saying boot camp is September 6th. If you have not registered as yet, just go in the main chat and say, hey, I didn't register, but I wanted to come. I will give you the link so you can go ahead and get registered. All right. Back to the lesson here, imbalance. So if we are in these markets, the major hedge funds and major players are going to be doing two things. It's possible that I did not share the audio, but anyway, they're going to be doing two things, right? They're either trying to balance the market or seek and destroy, all right? Balance the market or seek and destroy. Remember earlier we said that we wait for a discount that is 50% or more, all right? We do that because we want to know that the market has just about equal buyers and sellers. How many people are on the call right now? We got 28 people on the call. So imagine that we were the market itself, the 28 of us. Imagine that 28 people on this line were buying, 20 people on this line were buying and 8 people were selling. How long do you think we would be able to have things to buy? 20 people are buying, 8 people are selling. Is this market going to last long? Yes or no? Not very long, right? That would mean that we have way too many buyers and not enough sellers, right? That's a buyer's market. It's very one-sided. The buyers enjoy all of it. Sellers are like, what's for us? Okay? That is not going to last very long, and it's probably going to crash. Now, the same is true if you have too many sellers and not enough buyers. But a healthy market would be something like, let's say there are 14 sellers, 15 buyers, 16 buyers, 13 sellers. I can change the number, right? 16 and 12, sorry. Right? So that you have even, it gets a little even. You got, I sell it to you, I'm gonna buy it. But then I could turn around and sell it to somebody else because there's always someone buying and someone is selling. This is what a healthy market is going to look like. Every now and then, something like this happens. But when this happens and too many of one side is getting too much of the profit, eventually, somehow, some way, well, not somehow, some way, the banks and institutions will push the market all the way back down into this area, right? They're going to force it back into this area to get some of that money. This is all untraded money that's just sitting down here. All right. And that would be part of rebalancing the market. All right. So that is on principle, right? It's best to have a balanced market. And that's what it's going to look like with lines. Now, if we are looking at a chart, all right, let's use the example right here. So this is the daily chart that we are on right now. All right, so we're on the daily chart, these right here. If you have something like this is purple, is prices going down. Green is price is going up. Okay. So if you have purple looking like this, let's go back to the 1 hour. All right. Let me put this down here. Purple. All right. So for my beginners, this red candle is down, which means it's selling. This is up. All right, let me just put the actual words. Buy, sell, sell. All right. Buy, sell. Okay. Let's see here. All right. So we have these 4 candles on the screen, right? Green means it's going up. Red means it's going down. This is what that's going to look like if let me show you what it's going to look like if I draw it like this, just so you can connect the dots. So anytime you see a green candle, these things start at the bottom, right? They start at the bottom and they go up. When you see a red candle, they start at the top and they come down. Green candle starts at the bottom and it goes up. Red candle starts at the top and it comes down. All right. So these 4 candles are represented by this right here. Okay. For my beginners in the line, are you good? Type of AC if you are good right now. Excellent. All right. Green candle, red candle, green candle, red candle. All right. Cool. Now, whenever a candle is formed, it's going to have two um two parts to it, right? There's a structure to it where the candle itself can tell you how far it went and where it actually stopped. So when you see a solid candle, that means that's the body of the candle. This is where all the information is. This is where it opened and where it closed, right? So a green candle, the body is going to start at the bottom and it's going to end above that price, whatever the price was when it started. If Let's talk about this red candle. This green candle closed at this point. This red candle could have started here, right? Started at this point and come down to this price and start to trade back up. If that happened, if you've ever been on your phone and you see a little thing at the bottom of the candle, that's called a wick, and that's what that means. That tells you price was there, right? It didn't close there. It just was there for a little bit. That's the wick. What that's going to look like in this situation is this line is only going to represent where price closed. So it closed here. It came down here at one point, but it closed here. Okay, cool. Now, if you're looking to see if there's balance or imbalance, just using the candlesticks, we're going to look at 3 candles at a time, and we're going to pay attention to see if there is any space between the wick or the body of candle 1 and candle 3. If there's a space there, then there is a gap in the market or that's where imbalance showed up, right? Because that would mean that these two prices never really touched. So let me show you that real quick. So price going up, boom, comes back down. And then goes back up. All right, so price came here and then continue going up. All right, so follow these blue lines. This space right here, that is the imbalance. This space is the imbalance. If when this candle, this bearish candle was forming, it traded all the way down here, right? Came down, because you could see that where it stopped before is not even 50%. Let's say it traded all the way down here to about 60, right? Then this is what that would look like. We would have this, this came down. What is going on with my mouse? All right. So if this is what happened instead, there would be no imbalance. Sorry, there wouldn't be any imbalance. And this would have been evenly traded. All right, guys, let me know if you're following. All right, guys, my mouse is freaking out. All right. So this is over here. When this bullish candle formed, it went up like this, and then it came back down, right? So when this came 50% or 50, at least 50%, this low and then this high ended up being in the same space. So now there's no imbalance, right? But when we had the other setup and it was like this, there is imbalance, which now means there's money that was left on the table or money that was not taken up because these buyers made all this money here and the sellers never got any of that. The sellers were never able to get it at that price, right? The sellers were never able to push the price of the thing down enough that they can get any of it. So then this market is unstable. So at some point, price is going to want to rebalance itself. It's going to end up trading down here to get that money and then potentially go back up. So that now, when we think about, remember we're looking at the bullish market when it's like this, and I told you that the all right, hold on. When I told you that the come on. All right, when I told you that we will buy at the lower high and that there's something to the left of the lower high. What is, all right. All right, there's something to the left of the lower high that would identify this area. In this situation, if price doesn't pull back below 50%, right? We generally, just on principle, don't consider that a full pullback. The advanced students, you would have gotten into internal and external structure, all right? When it doesn't pull back into like 50% or so, you're now building something that's like internal structure. It's not really a deep pullback. And you would see this in the chart. Like it looks like price is pulling back, but it doesn't really pull back that much. So you don't know if to call it a low or not. 50% will give you a good gauge of if you should call that a low, right? But then it's still going to take your experience to connect the dots to see, all right, sometimes 40% could work. Sometimes a little above 50 could work, but that will help you. So what would happen here is, let's say this part traded down a lot more. We could then approach the market kind of like this. Let's see. We could then do this, all right? So we know just looking at this as highs and lows, we would say this is a low, high, higher low, higher low, higher high. And then you would say that this right here is a lower low. Now, if based on our conversation just now, you you count this as like an internal structure, then when you're looking at this pattern right here, instead of seeing this as a higher low, you would actually ignore that and you would go, let's see. All right. Let me know if you're confused. Type a L if you are lost right now. Type L if you are lost right now. Okay. We seem to be all good. All right. So that imbalance, right? That imbalance became a target that the banks and the hedge funds needed to get back to in order to balance this market back off in order so they can take it higher. So even though when you were watching the market, when you were watching the price move, it looked like you might have been guessing a, a sell starting to form, price then continue to go higher, right? You may not catch this when it's happening, until you start to see it happening a bit more, right? Because you might ask yourself, like, okay, price created a low and then went ahead and went higher. Why would it do that? Right? But sometimes we can get something like this happening. Pedro, does that help with your imbalance? I'm going to go to the chart now to see if we could find some on the actual chart. But you're really looking between three candlesticks and you're checking to see if there's a gap between candle one, candle three. All right. Now, when you're looking for imbalance, that should be occurring in an area that you would actually want to buy from. Right. So if this is price came down 20%, right? And pull back up. All right, let's head to the chart. Let's head to the chart, see what we can find. We're gonna go on the 15-minute and see what's up. Let's see. All right, let's see what we can get here. It's not really even trading. right, let's see what we can see over here. All right, when we mark up imbalance, price could always not respect our markup. All right, so let's see what we have. Let's start here. All right, here we are. We are looking at the GN. All right, looking at GN. What do we have? First of all, this is our high at the moment. And what got us here is this low point. And then the next high, right? The next high since this would have been over here. All right, cool. Say that one more time. All right, so if we say this is our low, all right, this is just trying to figure out where we're at. All right, this is our high. We can correct this if when we're looking left, do we see a low point lower than this? All right. What would have brought us here? All right, probably this. So now this is our low. This is our higher low. And this is our high, which means we got this. All right, cool. So we got our bullish pattern. So we know, all right, cool. So we are in an uptrend. So let's see if we can if we can get a higher low, right? Because right now, if this is the higher low, this is the previous high, we are currently looking at a higher high, but we don't know if price is going to start turning around from here. So we can't buy anything as yet. So we're going to start marking up. So Pedro, now that you have this higher low and this higher high, this could potentially be a new pattern forming. So we draw this and then we just take a look and we're like, all right, if this stays as the high, where could we pull back to? Just off the top of your head, you could go, you know what, let's see what happens around 50%, just as a gauge. You're not going to just set 50% and leave it alone, but you're going to take a look and be like, all right, let's see if this high holds, is there anything around 50% that would give the market makers a reason to push the market lower? All right, what do we have here? So if we count 1, 2, 3, we got 3 candles. This is the top of the wick. Come on, let me zoom in. Top of the wick, bottom of the wick. We got all of this space here. So you're like, you know what? This is potentially some imbalance. It's potentially some imbalance. So if price were to drop from here for whatever reason, all right, you don't have any information over here. You're just going to wait at this point, right? You know what you want, so you could set an alert for price coming below here, but you know, based on the pattern that you have, you want this, you want price to at least come to 50% before going up. So we give it some time. Let's hit the play button to see what happens. Pause, sir, pause. All right. So, a couple of things. So this was the biggest imbalance that caught our attention. Now, what could happen to you as a trader is you might see an area that is so large, you're like, yes, this has to be it. Is it below 50%? It is. So this has to be the one. That's what Kurt told me on Monday. But then you might have missed this right here. Let me know, did anybody on the call while I was talking, did anyone notice this here? Any advanced people? Or even any beginners? Did you guys see this? One candle, two candle, three candles. All right, so we had this. Now, is it below 50%? Absolutely not. Not of the entire move, right? It's not 50% of this, right? Because this is the low, this is the high. My beginners, this is where we're starting to drift into that intermediate advanced space where I told you about earlier. Sometimes you might get something which is internal and external structure, right? There's internal and external structure. This is the overall low. This is the overall high. However, in between the overall low and the overall high, we did get a low. I'm going to call this internal low. And we did get this internal high. All right. Let me know if you're following, especially my beginners at this point, right? If you don't completely get it, that is absolutely fine. Take the notes for future you. But at this point, you're seeing an internal low and an internal high. Does everyone see it? All right. So there's an internal low and an internal high. And again, my beginners, you're still seeing, you guys realize that this pattern keeps popping up, right? This pattern that I told you that keeps showing up. Y'all see that it showed up right here. Cool. All right. So since this is the internal low and the internal high, you can make some decisions based on that, right? So we did not reach 50% of the external, we will call it a range, right? We didn't reach 50% of the external range. However, let's break this down. This range has two parts, right? From the low to the internal high, which will put our 50% around here. And then there is from the internal low to the external high. We did not get as far as the overall 50%. However, look what we got. From this internal low to this external high, did we trade below 50%? Yes or yes? All right. Within that, within that a discounted area, was there an area of imbalance? Yes or yes? All right. Yes. All right. So, we know that from the external low, we know that from the external low to the external high, we did not pull back to 50%. However, there was a reaction, right? There was a reaction around here, which was above that 50% line. So we split the price action in two, where there was the external low to the internal high is one phase, and then the internal low to the external high is the next phase. We realized that if we look at the internal low to the external high, that we did trade into that discounted area, that 50% or more discount area. We saw that happen. On top of trading into that 50% or more discounted area, we also saw an area of imbalance show up. How do we know it's an area imbalance? We count 3 candles. 1, 2, 3. Candle 1, here's the top of the wick. Candle 3, here's the bottom of the wick. Do those two wicks touch or intersect each other? They do not. There's a space. There's a gap. There is an imbalance of buyers to sellers in this area. Price eventually came back to this area, and then there was a reaction. Instead of just blowing right past everything and breaking this internal low, what is going on? Right? Instead of trading below there and blowing through that internal low, we stayed above it. Right? We never broke past this wick right here. Price then came in and just started bouncing right around this area of imbalance. Right? Now, let's see if it continues to hold. Because within this area of imbalance right here, this is a high point. It's not an external high, but it is a point of structure that we could use to determine if we break structure again. All right. Now, beginners, bear with me a little bit, but it's the same idea. We are still looking at this. This is the low to the high. We got the pullback, right, which is going to come to this lowest point here. And then we expect price to continue. All right. We got, not only did we get a 50% discount, but this is almost like 90% off. So if we were to even buy this somewhere down here, right? The entry on this would have been amazing because we'd have got a 90% discount on price, which meant that our profit could have been really, really good. All right. So let's see what price does from here. Let's see if it goes up or if it comes back down, right? Because from here, I want you guys to pay attention to this. This area that we're trading off of, we haven't gotten to 50% of the actual range. We're still in this internal thing. So there's still a bit of caution that we would need to have when we're trading, right? Because there's still imbalance down here. All right, so we're going to see what happens. Do we go ahead and break this external high? If we break the external high, that is very good for us. All right, cool. We did break the external high. Now, let's switch time frames real quick just to take a look at this with less noise and see what that actually looked like. All right, let's see 1 hour. All right, and this is what the 4 hour was looking like. All right, so we did trade above the external high, which then means that we got a new external high. All right. Pedro, with what you were saying about finding difficulty in finding the imbalance, was this helpful for you? Anyone else on the line really that when you're trading, um, or even if not necessarily that you were trading, but you're just let me know if you followed what I did. Even if you're a beginner, let me know if coming from seeing the pattern, right? If coming from seeing the pattern to all right, good, 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 good. Let me know if the way we built on the principles was helpful, right? First principle is this is the pattern that we're looking at, right? This is the pattern that we're looking at if we're going to buy. When we're going to buy is always going to be at the lower high. What is it? Higher low. Jeez, not the lower high. We're always going to look to buy at the higher low. That higher low, yeah, that's fine. That's fine. All right. The lower high, sorry, the higher low usually turns up in an area, right? A discounted area that is 50% or more off. All right. 50% or more off the height of this range right here, from the low to the high, right? The higher low would show up there. Just on a point of economics, you want to buy as low as possible, you want to sell as high as possible, right? So we want to wait till we get a really good discount. Now, while we're looking in that area that is about 50% or more in a discount, we know that in order for this sell, or as we would have got from Michelle earlier, in order for this pullback to end, we need to think of this pullback as a downtrend, which means we got to wait for the downtrend to change its structure and start to become an uptrend. And we know that a downtrend is a series, right? A series of lower lows and lower highs. That is a downtrend. And an uptrend is what we want, right? The uptrend is what we want. Is a series of higher highs and higher lows. So when we're looking at price doing this and it's trading down, we want to stop seeing lower lows and lower highs and start seeing higher highs and higher lows. So that when the pullback comes down here and we start seeing this, price comes up a bit, trades down, doesn't give us a lower high, trades up, gives us a higher high, trades down, gives us our second higher low in an area that's 50% or more into an area of possible imbalance. We took the entry, right? We took the trade in that, geez. We took the trade here. Second higher low. This happens, right? This change, geez, you can let me move. This change happens down here within that area that we were looking at, right? To buy. This right here, this shift, this is here at the lower high, the overall lower high. So that's why for the advanced students, when you are analyzing your chart on, let's say, the 15-minute, Kai would have taught you when you're looking for the entry, drop down a couple time frames. If you're on the 15, you might end up on the 3-minute. You might end up on the 1 minute. You're on the 1 minute. looking for structure to shift. You're looking for this to happen that we just spoke about. And all of this stuff that's happening here, that's actually internal structure. Just that you're not thinking about it as internal structure. You're thinking of it as a confirmation. All right. So this pattern right here, this could have happened only 1 hour, but this change from the downtrend turning into an uptrend could have happened on the 1 minute, the 3 minute. Is this becoming a little clearer? I'm gonna wrap this up in a few minutes. We're definitely gonna be out of here before 8:30. But let me know if this is becoming even clearer for you. The more you understand this very simple pattern, this A, B, C, D pattern, the more you draw that and understand it, the more money you're going to make in this market. Because that's all there is. It's literally it. That's all the beginners are learning. And in advance, that is all you are mastering. Where was it? GU? All right. We covered these patterns in the first 5 minutes of this call. All I did was took you deeper. All right. These two patterns is all it is. That's all it is. You already know where to buy. You're going to buy at C. That's where you're buying. All right. So, sorry, you're buying at C, you're selling at C. C is only going to occur when the trend that's at B to C stops. C is going to show up when the trend that starts at B and comes down to C ends. That's where C shows up. You're going to see imbalance in your pattern somewhere between A and B. Somewhere between A and B on one of those time frames, you're probably going to see some imbalance. Ideally, you want that in the area if you're buying of a discount, 50% or more, if you're selling a premium of 50% or more. And that is it. All right, team, it's been phenomenal. Unless you guys have any questions, we can get up out of here and look forward to Saturday. And for those outside of Barbados, look forward to the announcement for when the virtual boot camp is going to be happening. That's with your uptrend only or your uptrend and your downtrend. Yeah, with the uptrend and the downtrend. All right, let me share my screen one last time. All right, so the yellow is the pattern that you draw, right? And the uptrend is going to start with A, go to B, C, D. We are always buying at C. In the downtrend, you're going to start from the top, and that's going to be A, B, C, D. And C is where you're going to be selling. So regardless of if you're buying or selling, your entry is going to be at C. C is the best place. All right. It's just getting an understanding and mastering what to look for to so that you know that C has happened. All right. And that's where the practice comes in. That's where marking up the charts on the weekend when the market is not active comes in. That's where asking questions in the chat. When you see something, a setup sent in trade ideas chat, ask any questions like, hey, was this at the lower high? Like, were you guys buying at were you guys buying at a higher low, or were you selling from a lower high? Let me know. Actually, let me take a look real quick. All right. This is the last thing. If you have to hop off, you can absolutely do that. Just going to see if you can connect some dots. So you only understand the trends and monitor if it's passes, support, changes direction with resistance. Mm. Um, in a sense, yes. I didn't talk about support or resistance at all in here. But yeah, support and resistance will come into play when you really get into the details of what you're looking at. But to just keep it simple, I just had you guys like, I mean, if you're advanced, then for sure. You could even write down that question and then like next Monday you could have it for Kai. Or if you jeez, if you post a chart, then yeah, you could get some feedback on that. That'd be great. All right, let's see. Issue is getting my ranges correct when I use. All right, no worries. All right, let me see if I find, let's see what's going on with GJ. All right, so we had GJ come through on trade ideas. Let's see if that was at C. All right, let's see if that was at C. That was 9:26 today. 9:26, 9:26. All right. So 9:26. Let's look at this 4 hour. Oops. All right. So trade alert came through on this 4 hour candle for a sell. All right. Now let's see. Let's see what we're looking at. So if this, right, if price was trading up and down this whole time, let's see what we got going on. So we can see that price clearly was going up over here. All right. Price was going up. And then what happened? This looks like a low, right? Did we break that low? Yes, we did. But was that an overall low or internal low? I'm not sure. All right, so we have price break this low, price traded down, pull back up. And so if that happened, then this would be our first, right? Lower low, right? This is a higher high. So we waited to see if we got a higher low. Sorry, a lower high, right? So this high right here is lower than this one. So yes, this is a lower high. So far for this, we got price came down and pull back up. Now to confirm this, we need to let price come down and break this low, right? To confirm our pattern. That did not happen until over here. See what I'm saying? We got the lower low here, we got the lower high, but we didn't get the completion of the pattern until way over here. So this was actually this high to low, to lower high, to then over here, to then get the lower low. Then we pull back here. I mean, yeah, I guess I'm doing this based on a 4 hour, right? And that would be insane for you to be waiting all of this time. But just work with me here. All right. So then this is our next lower high, right? This is our second lower high. So you could have placed the sell right here. But now we waited to see where we actually are in price, right? This is just going back in history just to see how valid the area is. Now, the entry on this particular trade was 99.43, 99, 99438. All right. Beginners, just follow me for now. Advanced, you see it, engulfing candle. Right? We got an engulfing candle. That is something that is really good to have. Right up there with having imbalance. All right. So we are definitely in an area that we could sell from, right? Because this is the higher low. This is the lower low. This is the higher low. All right. So we are waiting. We're actually looking for price to break this low. If it breaks above here, then this sell will be invalidated and that'll be sad for us. So we are in an area where we can see price selling from. This green line on the screen, that was the entry based on the trade idea. All right. The trade idea came in on this green line, price traded up. Would have put us into the trade. I'll have to check to see if it's still active or not. But we have price come down here. Now, what else do we have going on? All right, so if we go here, we got 1, 2, 3. We got a bit of imbalance here. Did that turn into anything of note? Yes, it did. All right, because when price came down, we did get a reaction in this area, which forced price back up here. Which is then now we're going to wait and see what happens. All right, we're going to wait and see. It's still valid that we could sell, but price needs to stay below these wicks. We don't want price above here. If price can come up in here and give us the shift that we spoke about, because right now it's going up, but we want it to go down. So we want this uptrend to stop being an uptrend and turn into a downtrend. And that would look like price coming up. All right, price comes up, doesn't give us a higher high, give us a higher low, pull back, and then we're able to sell. All right, so we want to see price breaking down. And that would occur on a lower time frame. All right, that's what we'd be looking for, price to break down. All right, so that was the entry. Let me see if we would have been still in this trade or if that would have hit. Anybody is in this GJ right now? Let me know if anybody's in GJ. 99873. Oh yeah, all right, cool. Stop loss is way up here, so all good. All right, so we're still at entry. So 15 minutes. So if you wanted to actually pay attention to this and see what was going on, then here are a couple of things. All right, based on what we spoke about, we are at equal highs just from a 4 hour structure standpoint. This is a lower high, and we are now at like an equal lower high. All right. Once we stay below 99.55, once we stay below 99.55, we're good. I think we're good. If we have price close above 99.59, then we would have a high created, right? And if we are selling, we don't want to see any highs. We only want lower highs. Understand what I'm saying? We only want lower highs. So as long as we stay below 99.55, we're good. We're going to know that we are really good when price closes anywhere by 99.25. Let's see. 99. All right, TP1 is down here. Let's see. Yeah, take profit 1 is down here. All right, take profit 1 is down here. But if we get price coming below here, right? If it closes below 99.21, if you close below 99.21, I think we're really good, right? That'd be great for us. And then we keep it moving, right? But if you're in there, take your time with it. Personally, if we close above 99.55, I will be taking an early exit because that's just what I do. I like to cut things early. You don't have to do that, right? Definitely you can wait until Educator that would have sent out the trade alert, lets you know. Obviously, if you took on the trade, you accepted the risk. The stop loss was 41 pips, so you would have accepted that risk and you'll be fine. If you did not over leverage, you should be within your 3% risk. So you have nothing to worry about, right? I just like to close things when structure shifts. That's just my personal thing. Alrighty, cool. So is that. Where does Zoom go? All right, guys. So with that being said, we are pretty much officially done here. You could definitely keep an eye on GJ if you are in it. If you are not in it, we are close to entry. So if you want to consider an entry on that, then you know what I mean, completely up to you. But yeah, looking forward to see you guys this Saturday or next Monday. Have a fantastic night on purpose.